If I know I'm supposed to do something, and yet I choose not to do it or simply don't do it because I didn't get around to it, I might as well have not known at all. A lot of times we talk about, I missed the time. Sometimes we just didn't get around to it because, well, we really didn't want to get around to it, or we didn't bother until it's too late. You know what? Timing is everything, but you still have to take action, even when you know the rules. Join us on Consider This program today. We'll break down some of those rules, actions, and things that have timing that you need to know about. Well, good morning and welcome back to Consider This program. I'm your host, Joe Clark.
And I'm Grant Soliven.
Happy to have you along. Grant, there is perhaps no part of financial planning that I think is so amiss to most individuals, for one reason or the other, as the good old United States tax code.
Mm-hmm.
There is, and I hear confusion all of the time. I will, every now and then I will tell somebody that, we help people with tax planning, and they'll go, Joe, I already have a CPA. And I will remind them that we have Brett Spangler in our office, who is a CPA. We had Ben Smith on the radio last week, who is a CPA, right? We've had countless CPAs that are on. We collaborate with a lot of CPAs. There's a reason they're here, and that's that it's not that CPAs don't know how to tax plan. Most of them don't have a process to help the average American family go through the tax planning that is required or that needs to be done. We just helped a family who sold their business, right? They were working with their CPA, happened to be Ben Smith in this case. Ben said, hey, you've got to see Joe. We sit down with them to go through their situation and to figure out what was going on. They give to church every year. They're very, very charitably inclined. They've got a trust that's involved that an attorney drew up that's a friend of theirs, that really did great work. I'm looking at the statements, and it's not that we know that much more than everybody else. It's that we have a process in place to make sure that we go through all of the things so that nothing gets missed. And by going through the financial vision to figure out where they really want to go, and then the 5 critical elements, we were able to help them develop a charitable strategy that's going to save them a lot of money, help them understand some of the issues that were inside of their trust, and go from there. But that comes because we have a collaborative effort with a CPA where we engage in tax planning. So Grant, what is tax planning?
Tax planning is work that is done before December 31st to take action on all of the levers that we get to pull using the U.S. tax code. Tax reporting is everything after starting January 1st. Essentially, tax planning, Joe, is what you're doing before information hits that 1040.
So every now and then I have somebody that'll ask me if I will help them do their tax return. And, I just kind of giggle. I've never filled out my own tax return. Mom did it when I was in college, and I've had somebody do it every year since. That's tax reporting. I can read a tax return like nobody's business. That's when the numbers are already on it. Taking all of the little sheets of paper and the deductions and figuring all that out just sends me into an anxious, right? I do not like it in any one shape or form. So tax planning, as Grant said, is what has to happen before the end of the year. So I want to ask you a question. When was the last time your CPA sent you a package the first week in October of the calendar year that you happen to be in, right? The first week in October, and ask you 8 to 10 questions that could materially adjust your tax liability for the year? I didn't hear any response, though that's hard to do over a podcast or radio. But my guess is that you never have, right? I pay CPAs a lot of money. I collaborate with a lot of them. I love these people. They're great friends of mine. We have a lot of families together, and they may tell you that they send out tax packages to other people, but I'm still willing to bet the only tax packages that go to their clients are the ones that come from our office, just because we have a process in place. It is Grant clears his calendar, and so does Darren and Aaron, and we send out over 1,000 packages to our families across the country that says, have any of these 8 to 10 things happen for you? We send it out the first week in October so that we have all of November to be able to plan and prepare, to be able to take action in December, because it has to happen before when, Grant?
December 31st.
And what happens after December 31st?
Reporting.
Yeah, reporting. It all switches. It switches hands. The baby is now out of the mama, and it's over, right? Mm-hmm. And that's why I call that thing a one-hit wonder. When the year is over, things are done, and you get into situations that are sad, right? If you lose a spouse, January 10th, July 25th, or December 23rd. All things are equal. That is your last year, unless you have young children. That is the last year you're going to file a married joint return. That's the last year. So if they pass away around Christmas, which we all know happens, right? You're around the holidays. You're devastated. Your family's in town. The last thing that you're thinking about is tax planning and investment planning and anything else that's going on. And you're going to have a material shock as a surviving spouse, widow or widower the following year on your taxes. Now, if you happen to have a child, you get a bonus year, right? I mean, that's we'll give you a break and give you an extra year to get that done. But that kind of timing matters a great deal. So, Grant, what are some of the things that actions that people should be taking or looking at as the end of the year progresses?
One of the big ones, even though we lost recharacterization, Joe, Roth conversions are a big deal. The tax code, relatively inexpensive right now, so take advantage of that. Gifting appreciated stock. I love it when you say that you use multiple tax returns. No, you're not cheating, but you have your mom's, you have yours, and you have your kids. And,
it's true.
And you have to be able to use all three. So what does it look like when you're gifting appreciated stock, right? Not just to charities, but if you're giving money to family, is it better to you do that through cash or a stock? Well, you got to know all tax returns to make that decision. Qualified charitable distributions, QCDs, and the list can go on and on and on.
There are, and that's the whole point. Remember, your mind will always move toward its most dominant thought. I've already said this on the show today, I think a couple different times, but whatever you are thinking about right now, you are giving it more attention than it deserves relative to other things that are going on. The acceptance, of course, is listening to the show. It did not get lost on me, how silly that sounds, but it's true. Your mind will move toward its most dominant thought, right? And so if you're thinking about, I want to take care of my church, you're typically not thinking about how do I reduce my taxes, or what is the best asset to give the church, or the litany of strategies that we have that we use to get what you want to the church. So what I tell everybody is we all have a job description, right? I'm the managing partner. Grant is one of our senior advisors. So, I work on the strategy of the firm and try to make sure that we're all working together in a unified fashion so that the company continues to be able to serve families well and grow. And, we're blessed with above a 98% retention rate. We just feel so fortunate for that. And it really is a testament to the people who are on the team, and we're blessed to the families that we're able to serve. But our job descriptions are different. Grant's job description is to be in that room with you, to sit down, to go over your financial vision, to look at your stuff, right? That's your investment statements, your tax returns, life insurance policies you already own, your trust, your wills, whatever your legacy documents happen to be. And he's going to go through a series of questions in a meeting that we call a next steps meeting. And in that next steps meeting, over 90 minutes, we will give you things to consider today, things that you really probably should take action on, things that you're going to want to consider in the future. And if we choose to partner together, and we'll put it into writing, what FEG will do for you, right? So that's what's going to happen in that 90-minute meeting. But Grant's going to go through a checklist so that we make sure we don't miss anything, because it's so easy to do, right? Your life after work, the annual tax plan, the investment playbook, life happens, anything going on in your life, good, bad, and ugly that's out there. And last but not least is a legacy plan. And he's going to ask you that in a very, very specific order, because that way we really don't miss things that could be there. It's not that I can't rattle off all of the things that I could do for from a charitable standpoint. I understand all the strategies, learned some, developed some, studied most, and we collectively as a team put them together. It's not that I would maybe miss one, but why take that chance, right? Why take that chance? And I spend my whole career doing this, so I do it with a checklist. It probably makes the most sense for you to have that, just like it makes sense for Grant to have that process for him when he's inside of a meeting. But at the end of the day, we're going to give you things to consider. Now, you have a job to do, and it's the good old, isn't it Shakespeare, Grant? To do or not to do? That is the question?
That is Shakespeare. I thought you were going with Yoda.
No.
Do or do not, there is no try.
Do or do not, there is no try. Very good. No, to do or not to do. That is the question, right? So when you give me something to consider, I will assure you financially, if somebody on my team tells you that you need to consider this, you might as well write in big red letters, you should do this, right? It is your choice. It is, we're not militants, right? It is your choice. It is your decision. But if we tell you that you should do this, in no way, shape, or form are we being financially compensated for this. We're not getting anything for it. What we're trying to do is to help you be the best fiduciary that you can be and fulfill our commitment, our promise that if we were in your situation, we would treat your money as if it were our money and we were in the same situation. And nobody on our team is going to sit in front of you and tell you you should consider this unless you should really do this, right? So it doesn't do any good to know things and then not do things, right? But we're going to give people things to consider today, Grant. Things to consider in the future, right? So when we talk about the future, we're talking not this year necessarily. Could be this year. Could be the double stacking.
Yep.
Could be bracket bumping, right? It could be something that they need to get funded. It could be what to do with the QCD when they're old enough to do it. Could be when you start taking RMDs to be able to use part of that as a gifting strategy for your charitable side. It could be making sure that you're making the most use of itemized deductions instead of just, there's lots of different things that are there. At the end of the day, go to yourlifeafterwork.com. Go sign up for a Next Steps meeting, meet Grant, Aaron, Dean, get with the team. It's 90 minutes. It's complimentary. And we'd look forward to meeting you. 800-928-4001.